All right, traders, let's get started. This is BA with a short video on how to buy call and put debit spreads. For information about why we do what we do when it comes to debit spreads, just refer to the other videos. This one, we're just going to focus on the mechanics of how to do it, how to place the order. So let's get started. Let's move right from the Monitor tab over to your Analyze tab. We are going to start with National Oil Well, symbol NOV. I'm going to go 33 days out, and we are going to buy a call debit spread. We're going to do a $3 wide call debit spread. We're going to start with the 36 strike. We're going to buy there, and we're going to sell at the 39. So to start the debit spread, just move over to the Ask column. You'll see Ask here, Bid is here. Calls are on the left, puts are on the right. A call debit spread is a bet that prices are going higher. We left click in the Ask column, and we see we get our 36 strike down here on the first line. Now move down to the 39 strike to complete our $3 wide call debit spread. Hold your control key down on your keyboard, left click in the bid column, and now we have our $3 wide call debit spread queued up. Let's proceed over to the risk profile graph and check it out. Let's compress it a little bit. We see that our risk is 99. Our max gain is 201. So we like those odds. We know that we can take profits anywhere once we put the trade on. Anytime that the stock is moving up along the theta line, the magenta line there, we can close this trade out. Also, we could also close it down if we get to a 50% loss. If we lose, say, $50, we can close it out right in that price as well. All right, so we like this trade. Now let's go ahead and place it. Right-click anywhere, and this is from the risk profile graph. Go ahead, right-click anywhere underneath the vertical tab, and you hit Confirm and Send. All right, so we want to double check real quick to make sure we're buying one lot of the vertical November call debit spread. We see the calls here. It's $3 wide, $36.39 on a limit. Now, right now it's priced at 99 cents. All right, so our cost of trade, including commissions, $99 is, again, our max loss, plus $2 in commissions. Excuse me. What I want to make sure everyone confirms and checks on their own platform is that you are receiving $1 per contract commission on options. That's very important. If not, contact Thinkorswim via your live chat or live chat request and ask them to move you to $1 per contract commission schedule. All right, we like what we see, except for one thing. We always want to try to buy cheaper if we can. So we see here, again, we always buy on the left-hand side of this graph. Never buy on the right-hand side. When there's a spread there, they will trade with you all day long at the natural. The mid is where it's where the most favorable price is, but we want to try to let the stock wiggle around maybe a little bit and go a little cheaper. So we adjust that down to the left of the mid. We're going to set this good till cancel. This price is, we're doing this because we are placing the order after market hours. So we like it. We're going to confirm and send. All right, we go to our Monitor tab, go open up working orders, and we see that symbol NOV, the debit spread is in for 97 cents. And we see the last mark on the trade on the last trading day was 0.985. All right, we like that trade. We're going to leave that in. All right, now the next thing we're going to do is we're going to shift over to buying a put debit spread. So for the put debit spread example, let's go from the Monitor tab to the Analyze tab, and let's type in Twitter, TWTR. Let's move to the Add Simulated Trades column. Again, we're in the options chain. Let's go to 30 some days out. and we are going to go over to the put side of the house. Okay, remember, strikes are in the center column. You can change your layout ever how you like it. I have all of the Delta Greeks showing. All right, so for the Twitter trade, the put debit spread, we are betting that prices are going down. So again, we have a bid column here, ask column here. We want to go to the ask column, left click. We're going to do a $2 wide put debit spread in Twitter. So we left click here in the ask column at the 25.50 strike. Again, for reasons about why we do what we do, refer to the other videos. Now with, we see that we've queued up our 25.50 buy strike. All right, so now we're making a $2 wide put debit spread. So we're going to go over to the 23.50 line, left, hold down on the control button on your keyboard and left click in the bid column. All right, now we have our $2 wide put debit spread showing on the bottom. Let's move over to the risk profile graph. Let's compress the scale, take a look at it. We see that our max risk is $87. Our max gain is $113. Same thing applies in the put debit spread. We're betting that prices are going down. Your price scale is on the bottom. So if Twitter moves down, we can take profit anywhere along this line. You know, $50% profit target would be somewhere around the 21.20 area. For those of you that are having trouble projecting your profit targets, this is one way to do it as well. We can close a trade out there. If it goes against us and it gets 50% against you, you can close the trade out, you know, anywhere on the downward sloping theta line. Okay, so we like this trade. We like risk to reward. We're bearish on Twitter. This is for demonstration purposes only. I have no idea what Twitter is doing right now. So we are going to go ahead and place this order. Again, from the analyzed risk profile graph, we're going to confirm and send. We're going to double check. Vertical, Twitter, March expiration cycle, $2 wide, 87 limit. That looks good. Again, our commission rate looks good, $1 per contract. So we are going to edit it. And again, every time we buy, whatever structure we're doing, we buy to the left-hand side of the graph. If we buy a put debit spread, we're still buying to the left-hand side of the graph. That holds constant in whatever complex option strategy you decide to eventually structure. But again, we want to buy it cheaper if we can, so we move the price further to the left, try to get a better price, change this to good till cancel. We like what we see there. We confirm, one last check, and we send. We go up to our monitor tab, we check, and we see that Twitter is posted with an 85 cents limit to buy. It's good to cancel. The last market price was 87 cents. We are exactly where we want to be. Now we just let this trade, these two trades that we placed, work themselves out. We just monitor them throughout the day. All right, the last thing I want to cover is how to close out a call debit spread. We're going to do that in another video, folks. I need to queue up some other trades so that you have something to reference. But hopefully this video on how to buy a call debit spread, how to buy a put debit spread was informational and helps you out in your trading. This is BA signing out.